Morning, everybody. Welcome to MarketStream.live. My name is Joseph Cusick with the Cusick Group. Securities offered by Money Block. Let's check out what's hot on the open. And I have to tell you, globally, stocks have been moving to the upside quite well. But here in the United States, it's a flat line. You could clearly see right now with the Dow Jones trading up 6 points, 4 points, 5 points. Love moving markets. Trading at 20,965.30. What's notable right here, this consolidation. Now we've had some big boy earnings over the last 10 days, and bottom line is that while earnings have been solid, it has not been a catalyst for the bulls, right? I mean, we're seeing right now that the markets continue to stay in this grind. And really, the ball is in the bulls' court. Unless they come in and they start moving this thing to the upside, you're just going to be stuck in this grind. So what do? Watch for critical areas. 20 and 50-day moving average. That's the reason why I'm showing you these charts. Not because there's any magic science or formulas in here. It just gives you transparency. It gives you levels and areas where you can now pay attention. So for example, on the Dow Jones, you're going to be watching this level. 20,000, basically 20,806. That right there, if breached, means that the short-term bulls, the individuals that have been buying stocks over the last month or so, they might get a little shaken. They're going to be on their heels. Then you're going to watch the 50-day moving average. That's going to come in at 20,675. You're watching this one because this is where institutions could be challenged. If they're put on their heels, and we're specifically talking about the Dow Jones, those 30 blue chip stocks, as they call them, if they come under pressure, then that means that you could have a larger potential distribution because there's maybe something fundamentally wrong. Maybe not necessarily wrong, but shifting in the marketplace. This area I've always called the battle zone. The area between the 20 and 50-day moving averages. The wider that gets, that means the more bullish the markets become. In this juncture right now, for the last basically 2 months, we've had this grindy, hard market. So unless you were banging out some premium, which really had no excess to it, you're sitting there just scratching your head going, what do I do next? Be conservative. Be focused. Right now, we're going to focus on tomorrow's data as well as today's trade action. That's really going to drive us going into the weekend. The employment data tomorrow is going to be scrutinized because it is one of the components that's going to continue to drive these growth expectations. And if we don't continue to see that we have increased employment, most importantly, increased work hours and increased wage inflation, those are the things that we're going to want to watch very closely because we saw the claims data came out. It was relatively positive. We had a lower amount of claims month over month, and we're still well under that 300,000 mark, which is a very solid number. So with the Dow trading at 20,961, it's going to be a grind. Taking a look at the S&P 500, the SPX, the cash settled index, is trading up 60 cents at 2,388.70. Again, right above its 20-day moving average. The bulls basically, and the bears basically been sitting here. Now, again, the conviction is in the bulls' court. If they don't start looking at this market and saying, okay, we're going to take the next leg up, we're going to put more risk capital at work, this isn't the bears' action right now because, to be quite honest, even if you were bearish on the market, it's very difficult to find anything that you really like to sell at this juncture. So the conviction is really on the bulls' side. And that also is going to be escalated if we start to see weakness in the tech area. I'm not saying we're going to see that, but we're seeing something that we haven't seen in about a month, which is a consolidation. You're seeing that after some great earnings, Facebook, Microsoft, Apple, Intel, Cisco, the names keep going on and on. They had solid numbers. I mean, for goodness sakes, Apple, they have more cash than the UK and Canada combined. The point being is that people are starting to say, well, what's the catalyst for the next leg up? Because it's not the federal government. It's got to be growth. It's got to be initiatives by companies, by governments that are showing growth, not bailouts, not easing. And as I always said, the canary in the coal mine, going to be the Russell 2000. Watch this one very closely. This is going to be the area where you're going to see domestically here in the United States any weakness in the Russell. That's going to trigger some uncertainty and may start tipping the scales for the bears. Challenge of a 20-day moving average yesterday. It settled above. That level right there is a critical level, fighting zone for the short-term bulls that got into these small cap stocks that are domestically centric. We have a lot of healthcare talk and we have a lot of tax reform talk, but no action still at this point. The 20-day moving average comes in at 1,388 on the Russell 2000. Watch that level very closely. A break there. Challenge of the 50-day at 1378. That means that then you can start seeing a retest of 1360, 1340, which is the next level of support that we've seen over the last 2 months. Volatility, basically muted. Can't find it pretty much anywhere. Unless there's a binary event like earnings, there is no volatility either in ETFs, indices, or individual names. Unless you're seeing an event like earnings out on a name, then you might see some short-term volatility, but that dissipates very quickly after the announcement. The dollar has been basically waffling around that 99 level. Today it's down 27 cents. It's right at 99. For dollar bulls, you got to hold that level. For dollar bears, you're now at long-term resistance, that 200-day moving average. Crude oil, as I said, once it broke the $49 level, basically you're looking at 47 pretty quickly. And we did. Break of 49 in 2 days, we're already at 47. Now you're looking at that $46 to $44 level as the next level of support. We're trading right now on the West Texas contract at 46.71. Reason being is that we saw a lower than expected draw on the EIA report yesterday morning. Basically less than 1 million barrels was drawn from the reserves. That's just not exuding growth. So crude is pulled back very dramatically over basically the last month, but you've seen it over the last 3 sessions really challenge. And now you're getting on this underbelly where a challenge of 46 means that you're going to see 44 pretty quickly. And we'll watch the data tomorrow to see if that catalyzes the crude markets. Plus, the dollar strength hasn't helped out the commodity as well. We're seeing that in the Brent contract too, a little uncertainty, but it is actually a little bit higher. We're going to now start listening to the rhetoric out of OPEC. Brent is a contract that is basically really dependent upon what's going on in the Middle East and OPEC nations. Watch Brent very closely. Any waffling by any of the OPEC or non-OPEC nations on adhering to the production cuts, in other words, they try to take advantage of this $50+ oil, pump a little bit more, sneak a little bit out there, make a little extra dough. That's going to put some pressure. Bonds down today. After the FOMC yesterday, basically they're staying the course. There's a lot of discussion of when they're going to actually start unwinding this balance sheet, both of the bonds that they have on their balance sheet and the mortgage-backed securities. Very interesting to see how they're going to time this. There was some anticipation that they might do this all at once and potentially this year, especially if things are as hot as everyone was anticipating. Well, that anticipation has cooled off quite a bit. Bonds are trading down in price. That means yields should go up. One area that you're going to want to watch is going to be the financials. See how they react to this. Also, watch the 10-year yield. As I said, that's going to be a good barometer to see how the finance sector and any interest rate sensitive sector is going to be trading. Right now it's trading at 2.36%. That's the highest that we've seen it in weeks, actually over a month. So now it's challenging that 2.4% level. Now you're getting over that 20 and 50-day moving average. This is where the bond bears are starting to grab on. Selling bonds, rates go up. Watch this one closely, folks, especially as we come into tomorrow's number on employment. This is going to be a big driver for this particular segment. All right, folks, that is it right now for What's Hot on the Open. Join me at 1:30 Eastern, 12:30 Central Time. We're going to be talking a ton about some strategies you can start deploying in this grindy, uncertain market. See you then here at MarketStream.live.